Now, if you're new to investing and you want to build out a long-term portfolio and see the best outcome long-term, it definitely can get very confusing with so many different stocks and of course ETFs that offer this, that offer that, but are sort of all trying to get your attention as an investor to be added to your portfolio. So in this video, what I want to do is I want to go through 3 very different yet 3 very popular and effective ETFs that offer different outcomes potentially, but 3 solid ETFs that could be definitely added to a long-term portfolio, again depending on what you're looking for. We're going to break down VOO, the Vanguard S&P 500 ETF. We're going to talk about SCHD, the Schwab U.S. Dividend Equity ETF, and of course JPIE, the JPMorgan Nasdaq Equity Premium Income ETF. 3 very different ETFs, but 3 ETFs that can definitely get you to where you want to go. Later on in the video, I'm going to share with you what $10,000 invested into each of them could potentially look like in the future, and when comparing these 3 ETFs, which of them have the best outcome as of yet. So especially if you're new to investing, definitely stick around, drop a like down below, and let's get right into it. My A to Z Dividend Investing ebook has already helped countless dividend investors get started with their journey. And my custom dividend tracker, the one I use all the time on my videos, has also helped so many investors stay organized and has actually helped them see their dividend income grow. Well, today I have something even better for you guys. When you click the first link down below in my description and you grab my A to Z Dividend Investing ebook, today you're not only going to get the ebook, but you're also going to be getting the custom dividend tracker, which you can use to track your own dividend income ongoingly. Get direct access to my personal email where you guys can email me any questions regarding dividend investing. You're also going to receive a link to view all of my holdings inside my 7-figure dividend portfolio and see all the positions I add and take away ongoingly. And you're going to get for absolutely free my brand new high yield dividend investing ebook, where I show you the power of maximizing some of these high yielding ETFs and teach you everything there is to know about that also. This is going to be your one shot to grab everything inside of one single bundle, but you got to move quick because I'm not going to offer this for long. Now with all that, let's get back into the video. So first things first, let's talk about VOO, the tried and true Vanguard S&P 500 ETF. If you're new to investing, you've definitely probably already heard about VOO. VOO is very cheap to hold on to with an expense ratio of 0.03%. And VOO, of course, offers you exposure to the S&P 500, which represents the 500 largest US companies. Now, the S&P 500 is not only very powerful and very good as far as performance goes, but it's more or less considered a gauge of the overall US stock returns. VOO is going to be an ETF that's going to offer you not as much cash flow. The dividend yield is going to be 1.16%. So yes, VOO does pay you income every quarter, but it is not going to pay you all that much income compared to the 2 other options that we're going to talk about later on this video. Now, VOO doesn't pay all that much income because VOO is going to be considered much more of a growth ETF. VOO holds on to individual stocks, around 500 names, like we said, that do have the potential and at least historically mostly have grown like crazy. VOO offers exposure to names like Nvidia, Microsoft, Apple, Amazon, some of the leading tech companies that are changing the world right in front of us. Now, VOO's performance since inception in 2010, that is, this ETF has grown around 680%. So you have not only seen investors double their money, quadruple their money, but investors have made so much off their money if they just held on to VOO and let time and the power of compounding do its thing. So if you're an investor that is seeking growth exposure, VOO, the Vanguard S&P 500 ETF, is 100% an ETF to look into. Now, the next ETF that's going to offer you a nice mix of not only growth, but also a ton of dividends, and dividend growth is going to be SCHD, or the Schwab U.S. Dividend Equity ETF. Now, this ETF's objective is to track as closely as possible before fees and expenses the total return of the Dow Jones U.S. Dividend 100 Index. This index is built up of around 100 different individual stocks that historically have paid a decent amount of dividends and grown their dividends too. Now, SCHD is also very cheap to hold on to at a 0.06% expense ratio. SCHD does not have any sort of option overlay. This ETF does have the potential to grow like crazy over time. And at least historically, as far as price performance, as far as dividend growth, this ETF has definitely satisfied a lot of long-term investors. Some of the main holdings in SCHD are not going to be as flashy as tech-driven, of course, but these names do pay dividends, and they have been paying more and more in dividends for a long time. Some of the top names are names like Chevron, names like abbvie, names like Home Depot, names like LG Group, Pepsi, etc., etc. Now, as far as performance goes, SCHD has also been pretty impressive on the max time frame. It's offered investors around 12%, 12.5% return on average every single year. Now, as far as dividends go, this ETF is going to offer investors somewhere around a 3.75% yield. So you are getting about 3 times as much cash flow compared to VOO. But like I said earlier, this ETF is going to give you a nice mix of exposure to individual stocks that can grow over time, but also are going to pay you a nice amount of cash flow and dividend growth right from day one. So this ETF could be perfect for that investor that does want some exposure to some growth, some upside. You want to see your portfolio grow, but you also want to have some cash flow being paid to you right from day one, again around 3.7, 3.8% as of right now. If you're looking for sort of a mix of income and growth exposure, SCHD is definitely an ETF worth looking into. Now lastly, an ETF that doesn't offer any dividend growth or really much growth as far as price goes, maybe a little bit, but much more income from day one, is going to be JPQ, or the JPMorgan Nasdaq Equity Premium Income ETF. The JPMorgan Nasdaq Equity Premium Income ETF seeks to deliver monthly distributable income and Nasdaq 100 exposure with less volatility. So with JPQ, you are going to get exposure to the Nasdaq 100, which is filled to the brim of growth-focused individual stocks. But then along with it, this ETF specifically is going to have a discipline option overlay, which implements written out of the money Nasdaq 100 index call options that seeks to generate a lot more distributable income. Now, how much in dividends, how much in income are we talking when it comes to JPQ? We're talking around 9.5% yield as of right now. Historically, it's been a little bit higher, a little bit lower, but around that 10% yield is sort of what you should be expecting with JPQ. At least that's what we've seen historically. Now, that means for every single share that you buy a JPQ from day one, you're going to be expecting anywhere from 44 cents per share per month to be paid to you, maybe even high as 49 or 62 cents, depending on things like volatility, the time of year, etc. Now, investors that are much more focused on cash flow, maybe don't really care about seeing your portfolio grow like crazy over time, maybe don't really care about dividend growth consistently going up and to the right, JPQ could be a great ETF to look into if, of course, once again, you're seeking income and you're seeking it today. Now, unfortunately, VOO, SCHD, and JPQ have all started trading at different time frames, so we can't really compare them head to head, but all three of these ETFs do have a nice positive green total return. JPQ in the max time frame is up around 61-62%, SCHD around 407%, and VOO almost 700% total return. Now, exactly what's going to happen in the future as far as performance goes with any of these ETFs or any others, of course, my guess is as good as yours. But if you were to have invested into any of these ETFs during inception, let's say $1,000, $10,000, $100,000, you'd be up significantly on your original investment, which is definitely a win in my book. Now, just to recap, for those investors that are seeking a ton of growth exposure, VOO would be the ETF to look into for some income, some dividend growth, and some growth on top of that. SHD is a great contender. And then lastly, for those investors that are seeking income and want some juicy dividends from day one, JPQ is worth looking into. All to say that I want to hear from you guys down below. Out of these three ETFs specifically, which would you personally choose as a long-term holding? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like in it, subscribe, and I'll see you guys in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.